Zillow has sent shockwaves through the U.S. housing market with a forecast that should alarm every homeowner and buyer. The real estate giant predicts steep home price declines in major cities once thought immune to downturns. And the data is grim. Pending home sales have plunged to record lows, cancellations are surging, and buyer demand has fallen below levels seen during the 2008 housing crash. Properties once valued at $700,000 are now selling for $500,000, erasing years of home equity almost instantly. Rising insurance premiums, property taxes, and worsening affordability have pushed the market to its breaking point. These 10 cities aren't just cooling, they're collapsing. And if Zillow's predictions hold true, the real estate pain is only beginning. Number 10. Northport, Florida. Once marketed as a Florida paradise of sunshine, beaches, and affordable retirement living, Northport's housing market is now facing a major downturn. According to Zillow's 2025 housing forecast, sharp price declines are expected as affordability collapses across Southwest Florida. During the pandemic, Northport home values skyrocketed to nearly $400,000, a stunning 70% increase since 2019. But with a median household income of just $61,000, home prices now sit at nearly 7 times local earnings, a level few buyers can sustain. The biggest pressure point is homeowners insurance. Florida has become ground zero for the insurance crisis, with Sarasota County homeowners paying $5,000 to $8,000 annually, if they can even secure coverage. Add flood insurance, often another $3,000, and retirees on fixed incomes are being priced out fast. Housing inventory in Northport is up nearly 80% in 2025, as builders slash prices by $50,000 to $100,000 to move unsold homes. Resales are worse. One property bought for $450,000 in 2022 recently sold for $360,000, a $90,000 loss in under 3 years. Pending home sales are collapsing, cancellation rates are soaring, and buyer demand has evaporated. Zillow expects multi-year price declines ahead, driven by shrinking retiree migration and unaffordable housing costs. Northport stands as a clear warning for Florida's boomtowns. When a market depends on endless in-migration and cheap money, the moment those fade, the housing crash begins. Number 9. Portland, Oregon. Once the darling of West Coast living, Portland, Oregon's housing market is now flashing red warning signs. Known for its tech growth, coffee culture, and once affordable homes, Portland is now facing a dramatic housing affordability crisis, according to Zillow's latest forecast. The median home price in Portland sits near $525,000, while the median household income is about $82,000, meaning homes now cost more than 6 times annual earnings, double the traditional affordability benchmark. With Oregon's high income and property taxes, plus rising insurance premiums, many buyers have simply exited the market. Housing inventory in Portland has surged nearly 40% year over year, and homes are lingering on the market for 90 days or more. Sellers who profited from pandemic price spikes are now slashing prices by $50,000 to $100,000 just to attract offers. Meanwhile, buyer demand has collapsed, with the pending home sales index at record lows, even weaker than during the 2008 housing crash. Compounding the crisis, crime, homelessness, and downtown vacancies have driven residents toward the suburbs, where even there, affordability remains broken. Zillow projects. Portland home prices will keep sliding through 2026 as stagnant wages and high costs crush demand. What was once a model for vibrant, affordable urban living has become a warning to the entire Pacific Northwest. Portland's housing bubble isn't correcting, it's bursting. Number 8. Cape Coral, Florida. Once known as Florida's waterfront wonderland, Cape Coral's housing market is now teetering on the edge of collapse. According to Zillow's 2025 housing forecast, this once booming city is facing steep home price declines and rising foreclosures. During the pandemic, home prices in Cape Coral exploded, from a median of $260,000 in 2020 to more than $420,000 by 2021. 2022, nearly doubling in just 2 years. But that unsustainable growth has reversed fast. In 2025, home values have already dropped 8 to 12% year over year, with some neighborhoods plunging over 15%. The biggest blow? Skyrocketing insurance costs. Florida homeowners insurance has doubled in 3 years, with premiums in coastal areas averaging over $6,000 annually. Add flood insurance, often another $3,000 to $5,000, and buyers are walking away before even factoring in a mortgage. Inventory is flooding the market. Active listings are up 65% compared to last year, and builders are slashing prices by $50,000 to $100,000 just to unload new homes. Meanwhile, pending home sales are collapsing, with cancellation rates above 15% as buyers face crushing costs from HOA fees, taxes, and insurance. Zillow projects. Cape Coral home prices will continue falling through 2026, and the outlook could be even worse. With a median household income of just $63,000, locals simply can't afford homes priced 6 to 7 times their earnings. Cape Coral stands as a harsh reminder that when a housing bubble inflates too fast, the crash that follows isn't just painful, it's catastrophic. Number 7. Washington, D.C. When even the nation's capital can't escape the housing downturn, you know the U.S. real estate market is in trouble. Once considered recession-proof thanks to government jobs, lobbyists, and federal contractors, Washington, D.C.'s housing market is now facing sharp price declines, according to Zillow's latest forecast. The median home price in D.C. hovers around $640,000, often for row houses needing $100,000 in renovations. With rising property taxes, soaring insurance premiums, and stagnant wages, affordability has completely collapsed. Even strong D.C. salaries can't offset the cost, and the buyer pool is shrinking fast. Across the country, pending home sales dropped again, and contract cancellations are surging, with D.C. following the same grim pattern. Inventory is piling up as homes sit unsold for 60 to 120 days, forcing sellers to cut prices dramatically. One condo purchased for $720,000 in 2022 recently sold for $580,000, a 19% drop in under 3 years. Buyer demand is now lower than during the 2008 housing crash, with the pending home sales index at just 72 versus a pre-pandemic average of 106. Zillow expects Washington, D.C. home prices to decline through 2026, even if mortgage rates fall. The city's housing bubble, once fueled by government spending and job stability, is now bursting. If the capital of the richest nation on earth is cracking, it raises a chilling question. What happens next for the rest of America's housing market? Number 6. Austin, Texas. Once the crown jewel of the pandemic housing boom, Austin, Texas is now facing one of the sharpest real estate corrections in the nation. Fueled by tech migration, remote work, and an influx of West Coast buyers, Austin's home prices soared. But Zillow's 2025 forecast now projects continued declines as the market unravels. The median home price in Austin peaked at $590,000 in 2022, but has since fallen to around $485,000, an 18% drop in just 3 years. Zillow expects another 3.5% decline through 2026, though many locals believe the downturn is already deeper. Pending home sales are at record lows, buyer traffic has collapsed, and inventory has surged 140% since 2021, signaling massive oversupply. Investors and Airbnb landlords who once flooded the market are now offloading properties as rental profits vanish and tourism slows. Entire neighborhoods are filling with for sale signs. Meanwhile, affordability has cratered. With an average household income of $86,000, mortgage payments on even modest homes consume over 45% of monthly income. Real examples show the hit. A home purchased for $720,000 in 2021 recently sold for $590,000, a $130,000 loss. Multiplied across thousands of homes, the scale of the correction is staggering. The Austin housing market wasn't built on fundamentals. It was fueled by tech hype and cheap money. Now the hype is gone, borrowing costs are high, and the Texas housing bubble is bursting wide open. Number 5. Sacramento, California. Once seen as the affordable alternative to San Francisco and Silicon Valley, Sacramento's housing market is now one of California's most overvalued and vulnerable, according to Zillow's 2025 forecast. After a pandemic buying frenzy, the city's real estate boom has turned into a sharp correction. The median home price in Sacramento is about $545,000, up nearly 65% since 2015, while the median household income is only $79,000, a staggering 7-to-1 home-to-income ratio. With affordability shattered, inventory has surged 70% year over year, and homes are sitting unsold for months. Builders are cutting prices by $50,000 to $80,000 and offering rate buydowns or incentives just to attract buyers. Meanwhile, contract cancellations are spiking, with Redfin reporting over 16% in July, one of the highest rates nationwide. Buyers are walking away once they realize the full cost of property taxes and insurance. Taxes alone run about 1.25% annually, or nearly $7,000 a year on an average home, while insurance premiums have jumped 25 to 40% in just 2 years. Real-world losses tell the story. A Sacramento home bought for $610,000 in 2022 just sold for $495,000, a $115,000 drop in under 3 years. Zillow projects continued price declines through 2026 as affordability, inflation, and oversupply weigh heavily on demand. The bottom line: Sacramento's housing crash proves California's real estate bubble isn't limited to the coast. It's spreading inland, and the fallout has only begun. Number 4. Denver, Colorado. Once one of America's hottest real estate markets, Denver, Colorado is now facing a major housing downturn, according to Zillow's 2025 forecast. Fueled for years by tech jobs, mountain views, and lifestyle hype, Denver home prices have soared far beyond what locals can afford, and the correction has begun. The median home price in Denver sits around $600,000, while the median household income is just $87,000, nearly a 7-to-1 price-to-income ratio. In the 1990s, Denver was considered affordable. Today, it's a financial chokehold. Inventory is surging, up 55% year over year, with many listings lingering over 100 days without offers. Pending sales are down 40% from pandemic highs, as buyers retreat and sellers chase falling prices. Price cuts have become the norm. $50,000 to $100,000 slashes are common after months on the market. One home purchased for $740,000 in 2021 recently sold for $625,000, a $115,000 loss in just 3 years. Even the luxury housing market in Boulder and Cherry Creek is stalling, with multi-million-dollar homes sitting unsold. With mortgage payments on a $600,000 home exceeding $4,200 a month, more than half of the city's median income, affordability has effectively collapsed. Zillow expects Denver home values to keep falling through 2026 as both the mid-tier and high-end markets unravel. The bottom line: the mile-high city isn't just cooling off, it's losing altitude fast. Number 3. Honolulu, Hawaii. Honolulu may sound like paradise, palm trees, ocean views, and island living. But Zillow's 2025 housing forecast paints a far harsher reality. The Honolulu housing market is now among the most unaffordable in the United States, and the bubble is beginning to burst. The median home value in Honolulu is an astonishing $880,000, while the median household income is just $98,000. A staggering 9-to-1 price-to-income ratio that's financially unsustainable. Locals are being priced out, with thousands of native Hawaiians leaving for the mainland each year. Population decline means fewer buyers and growing housing inventory. While property taxes in Hawaii remain low, nearly every other expense is among the nation's highest, from utilities and groceries to homeowners insurance. Combine that with elevated mortgage rates and sluggish tourism recovery, and housing demand has weakened sharply. The island's economy, heavily dependent on tourism and real estate, is showing signs of strain as job growth stalls and investor interest fades amid tighter vacation rental regulations. Real-world losses underscore the downturn. A Waikiki condo purchased for $1.05 million in 2021 recently resold for $870,000, a $180,000 drop in just 4 years. Zillow expects home prices in Honolulu to continue declining through 2026 as affordability collapses and migration trends worsen. The bottom line, Honolulu's housing market has reached unsustainable heights. And now, paradise is turning into a financial nightmare for many homeowners. Number 2. New Orleans, Louisiana. When Zillow flags Louisiana, the spotlight falls squarely on New Orleans. This housing market never fully recovered from the last crash, and now it's sinking again under the weight of high costs, weak demand, and persistent risks that buyers won't touch. The median home price in New Orleans is about $285,000, seemingly affordable compared to cities like San Francisco or Honolulu. But the median household income is just $47,000, creating a staggering 6-to-1 price-to-income ratio. Affordability is crushed further by skyrocketing insurance costs. Homeowners now pay $6,000 to $9,000 annually for homeowners insurance, plus another $3,000 to $5,000 for flood coverage, while some insurers have abandoned the state entirely. Natural disasters amplify the risk. Every hurricane season threatens property values, making each purchase a gamble. Meanwhile, New Orleans' economy outside tourism remains stagnant, with wages largely flat while costs soar. Buyer demand is evaporating, pending home sales are collapsing, and contract cancellations are among the highest in the U.S. Real-world losses are mounting. A home purchased for $310,000 in 2021 recently sold for $250,000, a $60,000 loss. Zillow expects further declines, and the forecast may even underestimate the severity. The bottom line, New Orleans is ground zero for America's housing affordability crisis. High insurance costs, low wages, disaster risk, and collapsing demand mean the housing market is heading lower, and Louisiana isn't just declining, it's drowning. Number 1. San Francisco, California. If one city defines America's housing crisis, it's San Francisco. Once the undisputed tech capital of the world, home prices soared to levels so extreme they made millionaires feel middle class. But according to Zillow's 2025 forecast, a 4% price drop is coming, and experts warn that's just the beginning. The median home price in San Francisco is an astonishing $1.25 million, while the median household income is about $127,000, a 10-to-1 home-to-income ratio, the worst affordability in the nation. Anything above 3 times income is historically a bubble. San Francisco is triple that. Inventory has exploded, with listings up 50% year over year, led by a collapse in the condo market. Downtown units once selling for $1.3 million in 2019 now sit at $950,000, down nearly 30%. The downturn is fueled by tech layoffs from giants like Meta, Google, and Salesforce, wiping out thousands of high-income buyers. At the same time, more than 250,000 residents have left the Bay Area since 2020, gutting local demand. Meanwhile, crime, homelessness, and vacant storefronts have transformed downtown into a ghost town, with commercial vacancy rates over 30%. High property taxes, soaring insurance premiums, and $8,000 a month mortgage payments make ownership nearly impossible, even for affluent households. Some properties have already fallen 20 to 25% from 2022 peaks, suggesting Zillow's -4% forecast may vastly underestimate the damage. The bottom line, San Francisco's housing bubble has burst, and as tech wealth fades, the city's real estate collapse is only just beginning.